Hey guys, so to start the day, I want to take a look at the Matic Polygon chart. Right now I have it open. This is the monthly chart, and the first thing you'll see, we're basically just forming a massive bull pennant. So if you're not familiar with what a bullish pennant is, it just looks like this. So you have the up move that's called the flagpole, and then the tops, basically you're making lower highs here, but you're also making higher lows, and eventually it would theoretically converge and then break out. It can break out at any time in either direction, but if we stay within this pennant, the expected breakout date would be, I mean, right around the time of the halving, April 24th. So I think that's when the Bitcoin halving is, and historically, when that happens, the market kind of goes crazy. So if we break out of this, as these points converge at the halving, I would expect it to have an upward break. And I just ran a projection on that, and the target for if this bullish pennant breaks out is around $8. So let's look at the weekly now. And so yeah, the price is just bouncing around within these two converging trend lines. I drew a downtrending resistance here, and that the price has been adhering to. So yeah, here we go. So when you identify these ranges, you can anticipate whether you want to enter long or shorts at certain price ranges. So for example, if the price comes back up to this downtrending resistance, I would look for a short opportunity. But you'll see right here, we're actually forming, this is called a bear flag because it's a downtrend and we're just doing a flag pattern here. And these tend to break down. So if that does happen, then so the trade opportunity here would be if this breaks out, then I'm going to look for it to come to this line here and look for a short opportunity. If it breaks down, then I have this massive uptrending support level right here, and I would look for a long entry here. Now, okay, I'm seeing something else here. If I'm to draw a horizontal trend line across this region here, which has some historical significance as being a support and a resistance. So you see support, support. We kind of cut through it here a bit, but then this served as support. If we come around, okay, and this also lines up with this down sloping resistance. So if the price bounces off here and comes to around this range, which is about 75 cents, then I would personally look for a short opportunity. I would put my, let's see if I enter right here, I just put my stop right here. So it's a very quick invalidation point, and then I can target, I can target the bottom of this lower trend line or here. So my first target would probably be about 66 cents. So the entry would be around 75 cents, first target 66 cents, which is a 3-to-1 risk reward ratio. And then if this broke down, I would trail my stop and I would target the bottom of this larger bull pennant, which would get me a massive 7-to-1 risk reward ratio for 26% gain, risking 3.8%. So that's one trade setup to look out for. As of right now, I'm not going to enter right now. We're kind of in the middle here. We're in no man's land. If we come to the bottom of this bear flag, I might look for a quick scalp. I'd be more, since it's a bear flag, I'm more excited to look for shorts at the top of this range than I am to look for longs at the bottom, because these will typically break down. Yeah, okay, so yeah, just operating within this range. So if we come up to touch here, I would just look for a short personally. I'm going to change the chart now, and yeah, here what we formed. So I don't have the larger bull pennant marked out, but here I noticed what happened here. This breakdown this is called a rising wedge. So if you're not familiar with the rising wedge, here's basically what it looks like. So in an uptrend, you'll form this sort of a pattern, and it most likely breaks down. Opposite to that, it can also be like a bottoming formation where the exact opposite happens. If you just flip this to the inverse, this is what you get, and it tends to break out. So whether it's a rising wedge or a falling wedge, rising wedge will break down, falling wedge will typically break up. Rising wedge is a topping pattern, and that's what we saw here. Now, normally the target for a breakdown of a rising wedge pattern would be right around here. This would be the target. We came a little bit through the target, but as you see now, again, we're forming the bear flag. So yeah, my analysis on this is basically on the long term, as I showed you, the monthly chart, the weekly chart, we're forming a large bullish pennant that's about to break out around the same time as the halving. That's when the lines converge together. But in the short term, we're just currently in a bear flag. So let's see here. Yeah. Okay. Let's look at the order block level, see what we got here. Okay, I mentioned this in pretty much every video. I always mark the previous day high and the previous day low. But in this case, we've already broken through it. So the previous day low is around 68 cents, but Bitcoin and the entire market just recently dumped. So here we are. This could serve as a potential support level. If not, this lower trend line lines up with this order block at around 63 cents. So if it comes there, maybe look for a long opportunity. But like I said, yeah, you can look for a long opportunity with a tight stop loss. But I'm more interested in looking for a short opportunity at this top range, just because this is typically a bearish pattern that will more often than not break down. Let's see here. Let's go to the 1 hour. Yeah, right now I'm not going to look to short either. I'm only going to look to short if we come back up to this range here, because we are in a order block zone where a lot of trades have taken place, and there is support around where we are right now. If this level breaks down, then I would look to this next one here. 65 cents. If that breaks, then this trend line here. So let me see one more thing here. Let's look at the dynamic support and resistance with the smart trail. Okay, so guys, the trend is still down. We are below the red smart trail, which indicates that we are in a downtrend. Let me look at this on the weekly. Look at how amazing this particular indicator called this sequence here. So we came up top of the rising wedge, which placed us just below this smart trail resistance. The play here would be a short with the stop loss just above here. And then it gave us a great call up here, and then it told us this X marked the exact bottom, and it gave us a take profit signal. This particular indicator, I'm going to link it in the pinned comment, but it's just crazy accurate. And I made an entire trading strategy based on using this particular indicator, using just a few setups that I'll also link in the description of this video. But yeah, guys, overall, just to recap, Matic looks good on the long term. This is just basically, if I zoom out here just to recap, this is a bull pennant. Lines converge, break out around the time of the halving. I think in the meantime, we're just going to bounce around in these ranges. So draw this on your chart. If you come up here, you can look for shorts. If you come back here, look for longs. And then you can go to smaller time frames and just map out smaller time frame patterns like this bear flag. And then you can just play these ranges. Trading is really not that hard, guys. If you can draw lines and just manage your risk to reward, look for high probability setups, it's really not that hard. Anyway, guys, yeah, that's it. Have a good day. Take care. Bye.